Welcome to the walkthrough of our ultimate 10-year financial model, designed for strategic projects in niche industries like renewable energy, technology, and real estate, and also for existing companies across a broad spectrum of industries. It includes features like integrated SWOT analysis, 5 different valuation methodologies, and an investor-focused what-if scenario. It offers unparalleled precision and strategic clarity. So let's explore its unique features and how they can empower your business. So firstly, this model is designed for simplicity and user-friendliness. The dashboard and all other input sheets include guided input areas with cells highlighted in yellow and blue text for intuitive navigation. Any changes made in the input sheets dynamically update throughout the model, ensuring seamless integration. Also, if you purchase this model, you'll receive a pre-populated mock scenario which is included, and it will help you to explore the model's functionality immediately. So you can just replace the mock data with your own business specific details and start customizing the forecasts yourself. Also, as part of the purchase, you'll get a blank version of this model if you wanted to start with the forecast immediately. So even those users with very basic Excel knowledge can confidently navigate this model and leverage its advanced tools. So if we look at the dashboard and annual projections sheet that we're currently on, this is the central hub of the model. It consolidates all the financial statements, any SWOT-driven adjustments, any key metrics made, any valuation assumptions. Everything is consolidated here in a comprehensive overview about your business's performance. So as mentioned earlier, the yellow shaded blue text, this is here as an example in row F17. If I remove this, automatically you'll see everything updates there for you. Also, to ensure a much more powerful and robust model, we've also allowed for you to look at forecast periods between 4 and 10 years. So you might have a situation where an investor wants to negotiate and they say, listen, but what is your valuation of your company at year 5? Or in this case, let's say year 6. If you go to year 6, you'll see everything here at the top is automatically updated. Automatically, you'll see the new return on rate of return for this project. The cash balances have changed. The valuation of the company have changed. Also, the years that's not applicable. Year 7, 8, 9, and 10 have been removed and the model cleaned up for you, so that it is extremely well presented and also much more readable. So if we move back to year 10, you'll see everything updates there for you. So the dashboard includes everything that is derived from all the sheets in the model. And as soon as you update just the input sheets, everything else is hard-coded. All the heavy lifting in terms of the mathematical formula and financial formula have already been incorporated, and it's already been done for you. So there's no need for you to even get involved with the back end side of the financial model. All the key components needed to understand the model is captured here: book value, valuations, asset values, debt, cash balances, everything very quickly can be seen on this dashboard model. One of the key components, and very powerful in this, is the fact that we allow and incorporate 5 different valuation methodologies. As a rule, if you had to get a financial model out there, or if you ask anybody to do a financial model for you, they would normally include just 1 or 2 maybe valuation methodologies, normally discounted cash flow. In this instance, we allow for 5. The purpose behind that is to give you a comparison between different valuation methodologies that's used across different industries. Also, it gives the investor an idea of your business and the top and lower values of valuation. But what is very important here is the synopsis. We've got an Investor Scratchpad that is automatically calculated for you. In this instance, you want to know, listen, based on my projections for 10 years and the valuation of the company, how much do I need to offer for equity? Somebody comes to me and they say, listen, we want to give you $2.8 million US for 50% of your business. This will tell you, listen, 50% is too much. A fair value is closer to 29%. And the methodology and the logic behind this is also transparent and very easily followed in the formula section of the business. So this is done for you. You don't have to worry about that. This is one of the key components and key questions we get from clients is, how do I know how much equity I need to offer to an equity partner or a potential equity investor, and how much do I would be too much, and how much would be too little. So this gives a very, very solid understanding, but also a solid framework to answer that question confidently. Now, because this is for an existing business as well, if you open up these columns here, you'll see that you can very easily, in the income statements and cash flow, allow for your past financials here for the last 2 years. So let's say you want to input your audited financial statements or management accounts for the last 2 years here for comparative purposes. Just take your financial statements, you input the actual balances from the balance sheet and the income statement, and very quickly you can then get comparisons between the past 2 years and your forward-looking projections itself. The other assumptions and the other inputs that would be required from you would be things like your dates, your starting date of the model, the inflation, taxation, working capital, funding parameters, if it's debt funding, how much interest, what loan terms there will be applicable, how long do you have to repay the loan, do you have any moratorium period. The cost of capital is also included here, and then the other parameters that drives your company valuation is also included here. Now, we do understand that not everybody have a very detailed understanding of valuations, and that is why we have, as a value-added service, included these read notes throughout the model to make it easier for people to, once they get to a term or a specific question, very easy for them to just click on the read note and see exactly what is required and what is meant by these various terms. Now, we'll come back to this SWOT section a bit later, but I just quickly want to run through the rest. Here is the what if scenario or Scratchpad that I've alluded to, and you can see there's no input required from you here. Everything here is automatically updated for you based on the valuation. You don't even have to worry about it. Even the text is updated for you. It shows you exactly, it gives you a textual interpretation of what is meant by the figures. That is done for you automatically. You don't even have to write the narrative there. The last key component of the dashboard on the input side is your operational assumptions, and this now speaks to your revenue channels, your sales price of either various products or services or categories. Here you've got the opportunity to input as many as 10 product lines or service lines or revenue channels, along with any other parameters like the capacity that you have to sell these products or services or manufacture or produce, what your total capacity is, what your actual capacity is that you will perform by. And this once again gives an extremely important interpretation of what your planning and so forth are, and very easy for an investor to follow as well. All of this is then incorporated and automatically calculated into your 3 financial statements, your income statement, your balance sheet, and your cash flow. Automatically done for you. No need to even worry about it or have an understanding of accounting. It's done for you. So too, all ratios. All your ratios have been done for you. If I open up let's go back there. If I open up there, you'll see that the client included some of the figures that they got from their financial statements, automatically done for you. Cash flow, automatically done for you. And there, your comparisons, automatically done for you on the previous years and then the future years. All right. Supporting schedules that drives the balance sheet, it's done for you. All your charts, there's 10 plus charts, automatically done and designed for you. If we go back to the cost of capital components, now the thinking behind the cost of capital component is that there's a lot of financial components and financial aspects that drives the cost of capital. So the cost of you getting a loan or the cost of you getting equity funding. Now, we've also incorporated the non-financial elements that's driven and derived from your SWOT analysis. Now, the thinking and logic behind this is that if there's more strengths than weaknesses in your business and more opportunities than threats, then the risk of investing in your business is reduced. It's much easier to invest in your business with a reduced risk because the business is much stronger and there's a lot of opportunities to take advantage of. Flip side is also true. The more weaknesses there are, the more threats there are, the greater the risk is to invest into the company itself. So if you go to this, you'll see there's a very comprehensive, more than 60 elements are incorporated in the SWOT, and literally just it requires you to rate each component based on your business. As an example, let's look at brand awareness. On the weakness side, our brand is very weak. On the strength side, our brand is strong. You might be a startup, so your brand is going to be weak, and it might just be -5, which is very weak because it's a brand new startup. As soon as you start doing that, in putting your figure there, the score automatically updates there for you. So too, on the opportunity side, you do the same with all the questions there. And once you get to the cost of risk premium, there you can see it automatically updates everything for you. So it says there, listen, based on the strengths and weaknesses that you've just gone through, the strengths outweigh the weaknesses. So there's a reduction of about 0.25% in terms of risk. Same on the opportunities and threat. Opportunities outweigh the threats. So the risk itself in the business is reduced by 1.3%. And also, if it now was on the negative side, more weaknesses, more threats, then obviously the flip side would be true as well. Now, all of this is then summarized for you into a business model canvas, which you can use as a summarized business plan or incorporate it in your business plan. And there, once again, everything is done for you. You literally can just use these as is. Moving back to the financial dashboard, there you can see everything is updated there for you. The other input sheets, just briefly, funding side, it would be the different assets that you can invest in or buy, all the non-assets like inventory and expenses, along with the figures, your working capital, and then your structure, funding structure. How are you going to fund this business? A combination of equity and debt, or just debt, or just equity, and this can be done here with all the checks and balances to make sure that the questions are answered here. Do you have enough funding? Yes, you do. Do you need more funding? No, we don't. It's all done for you based on your inputs. Depreciation, very minimal input from your end. It's automatically done for you. Same with your operating expenditure, just your first year or first projection year's operating expenditure that you can just input here, and it will automatically pull through to the income statement. And the same with your labor. If you're an existing company, you might have a headcount of number of employees already. You can just input it here. It will automatically take that into account as soon as you start appointing new employees. And then the final sheet that's very important that I want to quickly present to you is the valuation. Now, I mentioned there 5 valuation methodologies. It's extremely robust. It gives you comparisons for comparative purposes, a lot of ammunition to go into negotiations. And once again, everything is done for you. The company valuation, as well as the cash flow in the various exit years, it's done for you. The summary of your dashboard is done for you. Your various cash flows, your return on investments, everything here calculated, done for you. You'll see there's no yellow shaded blue text cell, so there's no input requirements from you. Everything is done for you. Valuation method 1, 2, 3, 4, and 5 done for you. No need to still think about or worry about completing those complex formulas. So I thank you for exploring this ultimate 10-year financial model for strategic projects with me. With its advanced features, investor-focused tools, and scenario testing capabilities, this model really empowers businesses to navigate complex industries with confidence. So Start customizing it today to drive your strategic growth and success.